Okay, let's dive into the wild, wild world of cryptocurrency. You've seen the headlines, right? Maybe you felt that rush when prices shoot up, or maybe the sting when they crash down. So, are we looking at the future of finance, or is this all just one giant bubble about to pop? If you're wondering what on earth is going on, you are definitely not alone. Let's break it down.
This is the million-dollar question, isn't it? After a roller coaster ride of insane highs and stomach-churning lows, you're probably asking yourself, is now the time to jump in, get out, or just hold on for dear life? We're going to try and figure that out today by looking at what the experts are saying. So what's really moving the needle in the market right now?
Let's start with just one number, 2,320. That's how many people in South Korea just reported holding over $360,000 in crypto. And get this, that number more than doubled in just 1 year. This tells us something huge. Crypto isn't just a fringe hobby anymore. We're talking about serious money flowing in. But why?
So why are the wealthy and these massive institutions suddenly piling into crypto? It really feels like we're watching it transform from a niche interest into a full-blown mainstream asset. Let's dig into what's pulling crypto into the big leagues.
It's not just one thing, it's a few key things happening all at once. You've got the big players, banks, investment funds, finally getting in the game. That adds a ton of cash and, legitimacy. Then there's all this buzz about the US approving crypto ETFs, which would basically open the floodgates for everyday investors. The rich are now officially treating crypto as a serious piece of their investment portfolio. And, on top of all that, new rules are making parts of the crypto world, like stablecoins, feel a lot safer and more reliable. This quote from a private banker just nails it. For a lot of these folks, it's not a question of if crypto is here to stay anymore. It's how do I get a piece of it? That fear of missing out, FOMO, it's becoming a real driver, even for the most careful, conservative investors out there. All right, let's talk about the original, the king of crypto, Bitcoin. Its recent surge in price isn't just random luck. There are some really specific trends and pretty wild theories that suggest this momentum could actually keep going.
The positive signs have really been stacking up. Bitcoin usually has a bad September, but this time it gained almost 4%. Then October lived up to its name, with prices blasting past 121 grand. And now, some analysts are calling for another 50% rally by the end of the year, with a target of $170,000. Some of the long-term models even suggest this bull run could last well into 2026.
So, where are these giant price predictions even coming from? Well, one popular theory is called the stock-to-flow model. The easiest way to think about it is to see Bitcoin as digital gold, right? There's only so much gold in the world, and there's a fixed supply of Bitcoin. Only 21 million will ever be created. The model basically says that as it gets harder to mine new Bitcoin, its value is just naturally going to go up because it's so scarce. Now, the analyst who created this model, who goes by Plan B, has a target that'll make your jaw drop. $500,000 for one Bitcoin. The logic is, as governments around the world keep printing more and more money, our normal currencies lose value. That could push people towards an asset like Bitcoin, which you can't just create out of thin air. In that world, Bitcoin becomes what he calls a scarcity magnet, pulling in capital that's looking for a safe place to hide.
But is the market just getting too hot? Is this getting out of hand? There's a cool tool called the RSI that helps us check the temperature. Think of it like a speedometer for the market. Right now, we're definitely moving fast, but we're not in the red zone yet. Historically, once that reading goes above 80, it signals extreme greed and a possible top. We're not there yet, which might mean Bitcoin still has some gas left in the tank before it overheats. But hey, Bitcoin is just the tip of the iceberg. Let's talk about the rest of the crypto world, the altcoins, the challengers to the throne. Now, this is where you find some absolutely massive potential gains, but you also find way higher risks. Let's look at 3 of the biggest names making waves right now.
First up is Ethereum, crypto's number 2, and it is the perfect example of just how divided the experts are. On one hand, you have supporters like Arthur Hayes, who see it hitting $10,000, arguing it's the bedrock for the future of finance. But on the other hand, you have critics like Plan B, yep, the same guy, who are just not buying it. They point out it's not as decentralized and its supply isn't as limited as Bitcoin's, which they think makes it a much weaker investment in the long run.
Next, we've got Solana, which is known for its blazing fast speed. A huge part of the excitement here is the chance for a Solana ETF, which would make it super easy for more people to invest. But it isn't just hype. Solana is seeing real, actual growth, We're talking over 1 billion user accounts and handling a massive chunk of transactions for the popular stablecoin USDC. That suggests it's building something that people are actually using.
And finally, there's Ripple's XRP, which is kind of the odd one out. Its big play is to partner with banks for regulated, cross-border payments, and a potential ETF could really put it in the spotlight. Plus, its community of supporters is incredibly loyal. But it gets a lot of criticism for being more centralized than other cryptos, and its goal of working with the big banks puts it at odds with the whole anti-establishment vibe of the crypto movement.
Okay, we've talked a lot about the upside, the exciting stuff, but now it is absolutely time for a reality check. What could go wrong? Because you have to understand the risks before even thinking about jumping in. You hear this phrase thrown around a lot, altcoin season. That's the time when all the smaller coins are supposed to go to the moon. But is it a sure thing? Well, some experts are saying, not so fast. They're warning that this time might be different, and that Bitcoin's dominance could actually keep the other coins from having their big moment.
Let's be brutally honest about the risks. The volatility is off the charts. One veteran trader warned that if Bitcoin drops 50%, many altcoins could lose 90% of their value. Or even more, they could get totally wiped out. We saw just how fast things can turn ugly when over $1.6 billion was liquidated in a single week. And on top of that, the experts can't agree on anything, the regulations are still a giant question mark, and big global events like interest rate hikes can send shockwaves through the entire market.
In fact, there's a really vocal group of people called Bitcoin maximalists who believe that everything, and I mean everything, other than Bitcoin is just noise. They see the thousands of other coins as nothing but distractions or worse, outright fakes designed to trick investors out of their money. For them, Bitcoin is the one and only asset worth your time.
So, what in the world are you supposed to do with all this? Let's boil it down to 3 simple tips. 1. Try to zoom out. Look at the big picture, the massive shift that's happening, and don't get obsessed with the day-to-day price swings. 2. You have to accept the volatility. It's not a flaw in the system. It is the system. It's a feature, not a bug. And 3, with so many experts yelling different things, you have to do your own research. At the end of the day, it's your money, and you're the only one who can truly protect it.
And that brings us right back to the big question we started with. After seeing the incredible opportunities and the very, very real risks, is there a place for crypto in your portfolio? Only you can answer that, but hopefully after all this, you're a little better equipped to figure out what that answer is. Thanks for joining me for this explainer.
Okay, wow. If you've looked at your crypto portfolio at all in the last few hours, you know exactly what I'm talking about. That feeling in the pit of your stomach when you see all that red. In what felt like the blink of an eye, the entire market just took a swan dive off a cliff. So what on earth just happened? Let's break down this flash crash right now and figure out what's really driving the panic. And just to get a sense of the sheer scale of this thing, look at this number, $770 million. That's not the market cap drop, no. That's the amount of money that was liquidated. We're talking about leveraged positions, basically borrowed money that got completely wiped out. Poof, gone. This wasn't some gentle dip. It was a catastrophic cascade that vaporized a fortune. And you could just feel the collective gasp across the entire crypto world. Crypto analyst Aaron Bennett really summed it up saying, "This is an insane day." I mean, when you see huge established coins getting cut in half, 50% in a single day, you know you're watching a major market event unfold in real time. So how in the world did we get here? This wasn't a slow bleed. This was a sudden, violent, out-of-nowhere collapse. And it seems like we can trace it all back to one single announcement that sent shockwaves not just through crypto, but through, well, pretty much every market on the planet. This chart really lays out the carnage. It was everywhere. This wasn't just one project having a bad day. Bitcoin, the king, down 16%. Ethereum, down 20%. And major altcoins, they got absolutely hammered, down 30% or even more. It was a total systemic bleed out. There was literally nowhere to hide. And that brings us to the main event, the thing everyone is pointing to as the cause, the Trump tariff trigger. Yeah, the catalyst for this whole mess seems to be a piece of geopolitical news that put the entire global financial system on high alert. And this timeline here, it's like watching dominoes fall in slow motion. First, on October 10th, China makes a move tightening its control over rare earth minerals. You know, the stuff you need for basically all modern tech. Then, President Trump fires back and fires back hard, threatening a staggering 100% tariff on everything from China. And just minutes after that social media post went live, boom, the markets went into a freefall. Here's the exact quote that lit the match. It's not subtle. The key phrase right there, over and above any tariff that they are currently paying, was a signal to every investor in the world that the trade war was about to go nuclear. And when faced with that level of uncertainty, what do investors do? They sell anything and everything that feels risky. Now, this is a super important point. This was not just a crypto problem. The S&P 500, the benchmark for the stock market, dropped almost 3%. And the VIX, which is basically Wall Street's fear gauge, exploded by over 30%. This was a classic risk-off event. It's a fancy term for a market-wide panic where everybody sells everything, stocks, crypto, you name it, and just runs for the safety of cold, hard cash. But while the tariff story is the one you'll see on the news, some crypto old-timers are looking at the data, scratching their heads and saying, something doesn't add up here. They're asking a pretty big question. Was there more to this than just a scary headline? Which leads us right here. Is the tariff news really the whole story? A lot of people aren't buying it. Some pretty sharp analysts are arguing that, yeah, the tariff threat was the perfect excuse, but the sheer speed and brutality of the crash, it points to something a little more sinister happening behind the curtain. So you've really got two competing narratives. On one hand, you have the tariff theory. It's clean, it's simple, and it's what most of the mainstream media is running with. But then you have the manipulation theory, which suggests this wasn't just a panic, it was a planned attack by exchanges to cash in on all those liquidations. Okay, so if you're making the case for manipulation, here's your evidence. First, the setup was perfect. There was a huge imbalance in the market. $20 billion betting the price would go up versus only $8 billion betting it would go down. That's a massive, juicy target if you want to push the price down and trigger a liquidation cascade. Then, surprise, surprise, major exchanges like Binance and Coinbase just happened to go down for maintenance right at the peak of the crash, trapping traders. And finally, people are pointing out that we've had scary tariff news before, and it never caused a crash this bad. The whole thing feels convenient. All right, deep breath. Despite all that chaos and fear, a lot of experts are looking at this situation with a completely different lens. They're focused on the long-term bull case, and they see this crash not as the end of the world, but as a painful and maybe even healthy reset for the entire market. So what in the world is a healthy reset? I know, it sounds a little crazy, but think of it like a forest fire. In the moment, it's terrifying and destructive. But what it's really doing is clearing out all the dead wood and underbrush. In our case, all the crazy leverage and gambling. It's a painful process for sure, but it lets the market grow back from a much stronger, more solid foundation. And this is so crucial to remember. The actual reasons to be optimistic about crypto in the long run, they haven't changed one bit. The Fed is still looking to cut interest rates. The AI boom is still happening. Giant institutions like Morgan Stanley are still pouring in. We're getting closer than ever to regulatory clarity, and the core idea of Bitcoin as a hedge against inflation is stronger than ever. The underlying story is still incredibly bullish. Beyond all the charts and financial talk, there's this really powerful human element. As the Nobel Peace Prize winner Narges Mohammadi said, Bitcoin can be a vital means of resistance. It's a lifeline for people in countries with collapsing currencies or oppressive governments. And that fundamental use case, that value proposition, has absolutely nothing to do with day-to-day price swings. And that long-term conviction is why, even after this bloodbath, you see these kinds of price targets from some of the most respected analysts out there. We're talking Arthur Hayes, Plan B, Peter Brandt. These guys are still calling for Bitcoin to hit hundreds of thousands, maybe even $1 million this cycle. To them, a crash like this is just a bump in the road on the way to much, much higher prices. So all of this brings us to the core dilemma for anyone in crypto, right? It's the constant battle between short-term volatility and long-term vision. It's all about learning how to tune out the noise and focus on what actually matters. So what's the takeaway here? First, you have to accept that crazy volatility like this isn't a flaw in the crypto market. It's a feature. It comes with the territory. Second, you have to get really good at telling the difference between a scary headline that causes a temporary panic and something that actually changes the long-term story. And third, history shows us that these moments of pure, unfiltered panic have almost always been the absolute best buying opportunities, if you have the stomach for it. Look, if you remember just one thing from all of this, let it be this. While the price action was ugly, just absolutely brutal, the fundamental story, the real reasons for crypto's growth, they are all still completely intact. Nothing about the technology or its potential has changed. And that kind of leaves us with a final big question to chew on. In a market that can get completely rocked by a single social media post, just as easily as it can be propelled by a genuine breakthrough in technology, what truly defines its value in the end? The headline of the day, or the fundamental code that powers it all?
Welcome to The Explainer. If you've been watching the crypto market lately, you've probably felt some serious whiplash. One minute you're feeling like a genius, the next, well, not so much. So today, we're going to try and make some sense of it all.
I mean, we saw prices hit these incredible new highs, only to come crashing down just moments later. It's enough to make anyone's head spin for sure.
So what is really going on here? Is this just random, unpredictable chaos, or is there a bigger picture we're missing? I've brought in our expert to help us separate the signal from all this noise.
Thanks for having me. And you're right to ask. That huge drop we all saw, it wasn't random at all. It was actually a chain reaction, and a pretty brutal one at that.
Okay, so let's walk through it. It all started with a big geopolitical announcement about tariffs. That was the first domino. It spooked the market and caused a small dip. But here's the problem. A ton of traders were using borrowed money, leverage, to make bigger bets. So when that price dipped, it triggered a wave of forced selling, which pushed the price down more, triggering even more selling. It was a total financial avalanche.
$19 billion. That number is just staggering. It really makes you wonder if this whole market is just a house of cards. Is there anything solid underneath all of this volatility? That is the most important question you can ask right now. And believe it or not, when you look past the noise of that crash, you see a completely different story. You see a real foundation being built, and it's being built with big institutional money.
Now check this out, because this is where it gets really interesting. While a lot of everyday investors were, understandably, panicking and selling, a massive $3.2 billion poured into Bitcoin ETFs. This was the second highest week of inflows ever. The so-called smart money was buying when everyone else was scared. And it's not just a Bitcoin story. Ethereum ETFs, which are led by absolute giants like BlackRock, have now blown past $11 billion in total assets. This isn't just a few people speculating anymore. This is Wall Street making a very serious move.
So wait, let me get this straight. While people like me are watching the charts panicking, these huge firms are just buying. They're steadily grabbing more and more. What does that actually mean for the future of all this?
Exactly. In fact, a lot of analysts don't even see what happened as a crash. They see it as a reset. Think of it like shaking out the system. It gets rid of all that excessive risk and those high-leverage bets. It kind of cleans the slate so the market can keep moving up, but on a much more stable foundation.
And you can see just how deep this goes. These big players aren't just buying crypto, they're building the entire financial plumbing for its future. You have BlackRock prepping its funds for stablecoins, Charles Schwab planning to offer crypto trading, and then you have companies like Ripple and Kraken making billion-dollar acquisitions to build out their services. This is serious infrastructure.
Okay, that all sounds incredibly positive. Almost too positive. It can't all be good news, right? What are the risks? What are the big red flags we need to be watching out for? Well, the biggest short-term risk is the exact same thing that caused the flash crash: leverage. All that borrowed money is still sloshing around the system. So while you have this stable base of institutional money coming in, you still have this very risky layer on top that can turn any small dip into one of those violent, cascading price drops. It's really the fuel for the fire.
And there's another really big shift happening. For years, crypto moved in this fairly predictable 4-year cycle, all tied to Bitcoin's code that reduces its new supply. But now, with Wall Street in the mix, that old playbook might be getting thrown out. We're entering a new world where things like global economics, interest rates, and institutional money flows are becoming way more important.
So, if the old rulebook is basically useless now, that creates a ton of uncertainty, doesn't it? How is a regular investor supposed to figure out what to do in this totally new environment?
It definitely adds a layer of complexity. But despite that uncertainty, the consensus among many analysts is still pretty bullish for the medium term. Now, these are just predictions. Nobody has a crystal ball, but you can see that a lot of experts believe there's still a lot of room for growth into early 2026, as long as those positive trends like ETF inflows continue. Okay, so on one hand, we have these really strong bullish signals. On the other, we have some very real, very scary short-term risks. How do we put this all together? And, this isn't financial advice, but how should we even think about all this?
Expert, I think it comes down to having the right mental framework. First, you just have to accept the chaos. These wild swings aren't a sign that something is broken, they're a feature of a young, growing market. Second, learn to find the signal in the noise. Focus on the real stuff, the institutional adoption, the tech being built, and probably most important, zoom out. Stop obsessing over the daily price action. Think in terms of years, not days or weeks.
That really does put everything into perspective. It feels like this entire landscape is changing faster than ever, which leaves us with a final thought for you to chew on. Thanks for joining us for this explainer.
The crypto market has been on a wild ride. And hey, if you're feeling a bit lost, you are definitely not alone. Whether you're celebrating some amazing wins or maybe nursing a few losses, it's been a total roller coaster. And that brings us to the big question on everyone's mind. What do I do now? It's a tough one. That's why we've got our expert here today to help us cut through all the noise. Welcome.
Hey, thanks for having me. It's a really critical time, and I know a lot of people are feeling pretty unsure about their next move.
That's right. And to put it in perspective, what we all just went through was basically a historic stress test for the entire crypto space. And it was all kicked off by global economic tensions. Understanding what happened and what could happen next is just absolutely crucial for any investor right now. Okay, let's just dive right in then. Because despite all that chaos and, the scary headlines, there seems to be a lot of optimism brewing. So walk us through it. What's the good news here? Why are some people still so incredibly bullish? Well, let's start with the big picture. You've got prominent analysts like Tom Lee from Fundstrat who are looking right past the short-term volatility. They're pointing towards a strong finish to the year. And look, this isn't just wishful thinking. It's based on some really powerful fundamental trends that are completely reshaping the market. For years, the crypto community has been talking about institutional adoption. Like it's some event way off in the future that would finally legitimize everything. Well, that future isn't in the future anymore. It is happening right now, and in a huge way. I mean, we are seeing Wall Street's biggest names dive in headfirst. JP Morgan is now accepting Bitcoin as collateral for loans. Morgan Stanley is actually telling its clients to put a piece of their portfolios into crypto. And BlackRock, the world's largest asset manager, is rolling out brand new crypto products. These are massive votes of confidence. And it's not just talk, is it? These companies are putting their money where their mouth is.
Exactly. This isn't just about financial products. Public companies are putting crypto directly onto their own balance sheets. Take a company like MicroStrategy. They just went out and bought another $18 million worth of Bitcoin.
And that $18 million got them 168 more Bitcoin. So you see, these aren't small, speculative little plays. This is a real long-term strategy from major corporations that see crypto as a genuinely valuable asset. Okay, so the big institutions are in. Got it. But what about the actual tech? Is this all just about the price, or is there some real progress happening behind the curtain?
That is a fantastic question, and it really leads us to the second pillar of the bull case. If you look beyond the price charts, the actual technology, the ecosystems themselves are getting stronger, faster, and way more useful every single day.
A perfect example is Solana. For the longest time, Ethereum was the undisputed king of what we call DeFi, or decentralized finance, which is basically a whole new financial system being built on the blockchain. But now Solana has come out as a huge contender, and it's processing transactions incredibly fast and for a very low cost. Now, what's really fascinating here is when you look at the hard data. On a recent day, the trading volume on Solana's decentralized exchanges, these are crypto exchanges that aren't run by a central company, it actually blew past Ethereum's. That is a massive milestone that shows real, tangible use. And this kind of innovation is just happening everywhere. Solana is talking about its own payment card to bring crypto into everyday shopping. Ethereum is getting ready for its next major upgrade called Pectra to make the network even better. And Ripple is planning to pump $1 billion into its own ecosystem to boost activity. This is real, fundamental, long-term growth. So with all this big money flowing in and the technology just getting better and better, I have to ask the $1 million question, or maybe the $100,000 question. What do the price predictions actually look like?
Well, the forecasts are undeniably bullish. Based on these strong fundamentals we've just been talking about, analysts are projecting some serious upside. I mean, just take a look at these numbers. We're seeing midterm targets for Bitcoin in the $140,000 to $180,000 range, with Ethereum and Solana also showing some huge potential for growth.
Wow, okay, that all sounds incredibly positive. It's really easy to get excited hearing those kinds of numbers. But it can't all be good news, right? For every bull, there's got to be a bear. What are the storm clouds on the horizon that we need to be watching out for?
Absolutely. A balanced view is critical. And the first major risk is remembering that crypto doesn't exist in a vacuum. It's a major global asset class now, and that means it gets affected by major global economic factors. And those are casting a pretty big shadow right now.
So the crucial point is that events that have absolutely nothing to do with crypto's technology can have a huge impact. That massive liquidation event we mentioned at the start, that was triggered by rising US-China trade tensions. And the upcoming US Federal Reserve meeting could change interest rate policy, which rocks all markets. These are powerful forces way outside of crypto's control.
So there are these big external threats. What about the risks from inside the crypto market itself?
Right. The very nature of the crypto market creates its own unique risks. The speed and the volatility that creates so much opportunity, well, that can also be a really dangerous double-edged sword, especially for newer investors.
This number is a really stark reminder of that danger. It represents $16 billion in value from leveraged trading positions, which is basically just borrowing money to make bigger bets that were completely wiped out in a single week recently. That's an all-time high. It just goes to show how quickly fortunes can be made and how even faster they can be erased. And this brilliantly illustrates another internal risk. That big money we were so excited about, it is not a one-way street. In one recent week, while over $200 million flowed into Ethereum funds, nearly $1 billion flowed out of Bitcoin funds. It shows you that even institutional sentiment can be split and can change direction very, very quickly. Okay, so we've got global risks, we've got market risks. When you put it all together, what are the charts telling us right this second? Are we at some kind of tipping point? That's the perfect word for it. In technical analysis, we're testing what are called key support levels. The easiest way to think about a support level is like a floor. It's a price where, historically, enough buyers have jumped in to stop the price from falling any further. Right now, for Bitcoin, that critical floor is right around $108,000. If the price bounces off this level and starts heading up, that's a very bullish sign. But if it breaks through that floor, the next stop could be much, much lower. And all this uncertainty is reflected in the market's mood, with the fear and greed index sitting squarely in fear territory. Okay, so we've laid it all out. We've got this powerful bull case that's built on real adoption and amazing technology, but also some very real risks from the global economy and the market's own craziness. For someone who's new to all this or just feeling stuck and confused, how in the world should they process all of this? The right approach is not about trying to perfectly predict the future, because, let's be honest, no one can do that. It's about weighing the evidence clearly. On one side, you have the bull case, which is built on these strong long-term trends, like institutional adoption and real tech growth. On the other side, the bear case is focused on these immediate short-term risks, like economic policy and market volatility. So, the key takeaway here isn't getting a hot tip on whether to buy or sell today. It's actually about looking inward first. You have to define your own personal strategy. You got to ask yourself, am I investing for the next 10 years or just the next 10 days? How much of a price drop can my finances and, honestly, my stomach actually handle? Answering these questions before you make any move is the single most important step you can take. That is a powerful and very practical way to wrap this up. It's not about predicting the market, it's about preparing yourself. A huge thank you to our expert for shedding so much light on such a complex topic. And of course, thank you for watching.